Hello everyone, in this video I wanted to look at the top performing Canadian ETFs. So I ran a scan here, which is what you're looking at, and it only includes ETFs that do at least 20,000 in volume a day and are listed on Canadian exchanges, and it does not include any leveraged ETFs. So just like your basic ETFs, which either buy stocks or other assets but not utilizing leverage. So of course this may be interesting to investors in Canada, but even if you are not in Canada, Canada has some interesting things going for it. They have been way ahead of the US in allowing physically backed Bitcoin and Ethereum ETFs. So physically backed is generally better than futures backed ETFs, because when you have a physically backed asset, the ETF just has to hold that asset. When it's a futures backed asset, so they're buying, let's say, Bitcoin futures contracts expire, which then means they need to go in and rebuy those Bitcoin futures, which of course incurs fees and then ends up reducing your overall return. So the US did allow Bitcoin futures ETFs in the past, and they recently allowed physically or spot ETFs on Bitcoin, and they're only now just starting to potentially approve Ethereum spot ETFs or physical Ethereum ETFs, whereas before they had allowed futures Ethereum ETFs, which, as we discussed, not quite as good. Canada has allowed these spot or physical type Bitcoin and Ethereum ETFs for a number of years, since 2021. So there are some advantages. Also, Canada offers these ETFs. Generally, there is a Canadian dollar version as well as a US dollar version. So this opens it up to international investors who are looking to maybe buy in US dollars. They could buy on a Canadian exchange if you wanted to get, let's say, now the US does have physically backed Bitcoin ETFs, but if you were potentially looking for Ethereum physically backed ETFs, Canada has those as well. So they've just been a little bit quicker to adapt in terms of what they allow, even though it's still a highly regulated market. Canada known for financial stability. And if there's some other ETFs that you were looking for which aren't available, especially the crypto type ones that aren't available in your country or in the US, you can look to Canada. They may have one. So let's just look at some of the top funds, and I'm only going to look at the top ones in the industry, and you'll see why. So we have the top performer of the last 3 years is the iShares S&P TSX Capped Energy Index, so just investing in energy type stocks. There is another one just below it. You can see another Canadian oil energy type stock, a little bit lower return, but if you were looking at energy ETFs over the last couple of years, this would be the one. So then next we have the BTCX.B. This is the ICI Galaxy Bitcoin ETF, priced in Canadian dollars, unhedged. Remember, Bitcoin generally they're going to be buying it in US dollars. So since the fund is priced in Canadian dollars, there's a bit of a currency thing going on there, and they don't hedge any of that currency exposure. They're buying in US dollars, but it is priced in Canadian dollars. Then you can see some other Bitcoin ETFs. There's a number of them. But that is the top performer by about 3% over the last 3 years. And then the returns kind of drop off, even though they're all Bitcoin ETFs. Then you have another ETF based on energy, but quite a bit lower return than these other ones. Then you have a couple more Bitcoin ETFs. Here's an example of one priced in US dollars. So you actually buy that fund with US dollars. Continuing down the list here, you can see the next kind of industry, you could call it, would be the Enhanced Dividend ETF, TUED.TO. And that focuses on dividend stocks, but in the US. So even though it's a Canadian-based fund priced in US dollars or in Canadian dollars, it is buying stocks based in the US, with the primary focus of capital growth as well as income and dividends. So these other ones, this one, the Energy ETF, this one owns stocks. This next one owns some stocks, but potentially writing covered calls on them, meaning writing call options so that they can generate some income as well. If we look here, we can see the dividend yield on this one about 3%, a little bit higher on this other one, 13%, close to 14% because you're writing those covered calls. Be aware, anytime you have a covered call type strategy, that dividend yield can fluctuate a lot. So 13% now, in a few months it could be 7%, and then it could be 20%, it could be 3%. It's a generally very fluctuating for most of these types of ETFs. So just be aware of that your dividend yield is going to fluctuate a lot. It's not really a fixed amount. These Bitcoin ETFs, all holding physical Bitcoin as we discussed. Another covered call ETF. So they're owning energy stocks as well as writing call options. The dividend ETF owning stocks that pay dividends. And finally, the CI Galaxy Ethereum ETF. It owns physical Ethereum, and obviously none of these Bitcoin ETFs, unless they're writing covered calls or something like that, will not have a dividend yield, because if we look at it, dividend yield is 0. Overall volume, pretty good on this one, close to 1 million shares a day. The CI Galaxy Bitcoin ETF, the top performing Galaxy ETF, about 500,000 shares a day. The other ones, you could check out on your own if you're interested. I'm just kind of focusing on the top, the top energy one, the top Bitcoin one, and then we have this ETF for dividends, 22,000 shares a day, so that's pretty low volume. And in terms of this Ethereum one, close to 500,000 shares a day. So some options to consider. There's no guarantees that these will continue to perform well into the future, but you could look at them and possibly decide if you wanted to add them into your portfolio if they meet your own investment objective.